Good morning and welcome everybody. We'll just give everybody a few minutes to log in. We've got over 500 people registered today, so just give them a few seconds for Zoom to admit them, and then we'll kick off. Very good. Well, look, thank you very much indeed for joining us. This webinar is about dental and COVID, a tale of two cities. And the title is very much driven by the fact that we have a market of two halves, or possibly three. We've got NHS-funded dentistry, private dentistry, and some mixed practices. My name is Henry Alfik. I'm the CEO of Languissant. I'm delighted that we're doing this webinar in partnership with Charles Russell Speechley, who have a number of specialist dental lawyers based out of Guildford. And there's a link in the emails that you've been sent to their knowledge hub with lots of useful advice specifically for dentists. We're also doing this in conjunction with Healthcare Markets, which is our journal that covers the private healthcare and particularly dentistry markets, and Turn to Us, which is our charity of choice, who are helping people in financial need during coronavirus. And they've been working actually with the Daily Telegraph. They've raised £2 million and they're giving £500 loans to people who have fallen on hard times, really targeting tiding them over until government benefits can kick in. So with that, we're going to start by getting the Slido to work. For this, we're using a different platform for questions and for polling. And the principal reason for this is that with so many people on, we want to address the most relevant questions. So if you go either in the browser on your computer or on your phone or on your tablet, just open it up and put in slido.com. And that'll bring up a page with an event code. And you just have to put in the word dental. And what this will allow you to do is to pose questions during the course of the webinar. And you can do this either anonymously or you can put your name to them. Those questions can then be upvoted. So if you're on Slido, you can see all the questions that have been posed. And if there's some you particularly want addressed by the panel, just upvote those questions and they'll come to the top. Secondly, there are a number of polls as well. And we've got a poll running. So what I will do is just change the screen to the polling screen. And this will allow us to see how many of you have managed to log in successfully. So the question we've asked is, when will we see valuations stabilize again? Clearly, we had some robust valuations for dental clinics before coronavirus, but we've already seen a dislocation between, as we mentioned at the beginning, the two different parts of the market. We know that some acquisitions have been renegotiated. Do we think this is a short-term dislocation in the market, or actually is this something that is fundamentally resetting where market valuations are? So I can see 43 of you have already managed to log into that. We will let that run in the background, and at the end we will circulate that poll to people so you can see where we've come out. So just in terms of setting the scene, there's been a lot of news out there around dental, concerns over the delay in accessing treatment, news that dental practices are going to open from the 8th of June. But I think the other element is there's been a vast amount of advice out there from government, the General Dental Council, British Dental Association, Scottish Dental, about what people should and shouldn't do during coronavirus. And I think whilst everybody clearly wants to follow best advice, it's often quite difficult to identify what that is, and it's often conflicting. And I think the panelists we have today are very well positioned to give their view on what they're doing. We've also had a whole series of questions in from attendees. And I just wanted to highlight a few of these before we start, because I think the panelists will address a number of them during their presentations, but also this will play into the Q&A at the end. And we put them into three segments. Valuations, clearly people are very focused on the medium and long-term impact for valuations, both for larger groups, but also for individual practices. And one question is, what advice would you give to people considering acquisitions at the moment? Is this a good time to do it, or actually is it still a very uncertain time? On market structure and impact, lots of questions around associates. Will their pay go down? Will they lose their jobs? As perhaps the principals in clinics take the reduced workload and do it all themselves. With the NHS contract being paid out in full for UDA deliveries, what is going to happen around clawback and when? Who's going to pay for PPE? The costs have gone up significantly. What are people doing around their dental plan businesses? The negative impact that's emerging from the lack of access to dental services, and you saw that in the headlines earlier. Should dentists consult their indemnity providers? We had Marsh on a previous webinar talking about business interruption cover. How are practices coping with patients' fears? So a lot of this is around people being afraid to go into a practice. So it's more of a psychological thing than necessarily the pandemic itself. What do we need to do with CQC around reopening? Do we need to tell them we're reopening? And then if we look at outlook and funding, do we need one point of authority and leadership for UK dentistry? I mean, you saw already there are lots of people speaking out with advice on what to do, but actually would it be helpful to have one point of authority? What does the dental market look like if people can't open until the autumn and potentially later? And again, what will NHS England be doing around these clawbacks? So I think there are a couple of themes there that the panelists will address. Just very quickly on the dental market, and this is a pre-COVID snapshot. And this is a very significant market. It's over £7 billion in 2017-18. It's growing 2 to 2.5%, albeit that growth until recently had been much stronger in the private pay than in the NHS funded market. But you can see that the private pay market and the NHS dentistry market are broadly similar at around sort of £3.5 billion. Clearly the world is changing rapidly, and there will be a new Languissant dentistry report updated for COVID in Q4. And actually this webinar is extremely helpful in informing us about the direction of travel in the market. So on that, I am delighted to welcome our panelists. Sam Whaley-Cohen is well known to many people on this call as the CEO and founder of Portman Dental, who are one of the larger providers focused purely on the private market, although I'm sure there's a small amount of NHS business there as well. Ian Gordon and Dr. Stuart Allen are both practitioners. Dr. Allen is currently rebooting his computer and hopefully will be joining us soon. But I think we were keen to have two dental practitioners on because they are thinking as dentists in the front line, combining the challenges of practice with the challenges of business as well. And Ian has now joined Riverdale, which is the asset capital platform that is consolidating a number of dental practices. Dr. Allen is the chair of the National Conference of LDCs. And then finally, Helen Wong, MBE, who's a partner at Charles Russell Speechley and leads their dental practice. So on that, I am going to hand over to Sam to set the scene from Portman's perspective with a few slides to introduce Portman, but also just give us a snapshot on what's been going on in terms of the day-to-day, but also focus forward on the outlook for the sector and for Portman in the medium to long term, which I think is almost more important. So Sam, over to you.
Okay, well that's rather a lot to cover, but I'll try and talk quickly. So just a very quick snapshot on Portman if we turn to the next slide. So this is Portman. So we're the largest and fastest growing provider of high quality dentistry in the UK and Ireland. And we talk rather grandly about having an ambition to be the best dental group in the world, which we accept is quite grandiose, although it does underpin our true ambition, which is really transforming dentistry and imagining how dentistry can be delivered in a very different way. And this crisis has probably been a incredible stimulus for change, and arguably a stimulus that dentistry's actually required. So when we step back from it in a few years' time, I think dentistry will come out in a stronger and better place than it was before, albeit it's going to be extremely challenging in the next few months. We turn the page. This is a snapshot of Portman, so it's modestly out of date, which I apologise for, but not too far. And just a couple of key points. So we're a bit over 137 practices. Typically, our practices have 5 chairs. We have roughly 3,000 people in the company, and something we're very proud of, which is our dentist churn, which is our key measure of engagement. And when we think about what Portman's trying to do, we try and set out to have a very clear value proposition for our clinicians and for our teams at the practice, and a very clear value proposition for our patients. And for us, that dental churn is the value, is the measure of whether we're achieving what we're trying to do with the value proposition. So that's roughly a third of what we typically see in the market, and we see ourselves, our jobs of trying to make Portman the most interesting and exciting place for anyone to build their career in dentistry, and seeing that really playing out very well. Given us a chance with those gongs, so pleased to be an outstanding business of the year for the last 3 years, and that's helped us grow. So you can see here, go on one slide then. You can see here our growth story. So I founded it in 2009, and we've really set to grow in a pretty steady and managed way, build the platform, build the processes, build the people, and as you might imagine, the FY20 number is not unfortunately going to play out as we'd hoped, but you can see the trajectory for Portman, which is really about bringing on really strong practices with really good clinicians, and building a strong platform. So that's a little bit about Portman. Henry, do you want me to go on and talk a little bit around the outlook as we see it for dentistry?
Yes, please. I think that'd be very helpful.
So I think, entirely personal view, I think the sector is going to separate very quickly between the winners and the losers. So some of the changes, what are the big macro changes? So clearly consolidation will continue to play out. Consumerization will increase, digitalization will become more rapid. Just to sort of touch on 3 wide macro trends. We believe the practices, the companies that embrace those trends will end up being the really dominant players in the market, particularly around consumerization and digitalization. So we're working hard on those projects. Those practices and companies that want to go back to how dentistry was delivered before, which was in many ways the 9 till 5 and an hour for lunch, and knock off on a Friday afternoon, we see those types of practices going to face extremely challenging times. I think on the NHS, the jury is very much out. There was, I think there are 2 drivers. In the short term, of course, practices have been paid full contract value for not delivering an awful lot of service, and actually being paid full contract value even when they weren't historically fulfilling those contracts. I think the NHS set out to do something very good, and it's had some possibly unintended consequences. And experience suggests when the NHS feel like they haven't had great value for money, they look to recoup that in other ways. So I think the jury's out in terms of what the next 6 months look like for NHS practices, in terms of how those contracts will work. There's really no visibility on that. And beyond that, one of the things that the NHS have come out with, and the CDO came out with an interesting thought piece in dentistry, which was her vision for dentistry going forward, which really talked, to my mind, of a minimal universal system focused on digital interactions minimally invasive treatment and referrals to UDCs. So that's a dramatic change in the vision of how NHS dentistry might be delivered. And if that comes to pass, then there will be real structural changes in terms of how the sector operates. So I think a very interesting moment for the sector. Personally, as I look at it, I think there are enormous opportunities. We're extremely excited by what is in front of us. Be unfair to say we're not modestly daunted as well, but we think there are great opportunities to enhance the service to the patient and enhance what we deliver to our clinicians. So I'll leave it there, Henry, unless you want me to talk about valuations as well, but I think we might come back to that.
I suspect we will come back to valuations, absolutely. No, Sam, thank you very much for that. I think that sets the scene very nicely. So I think just as sort of my key takeaways there, the three big drivers around digital, around the consumer and consumerization of dentistry, and around the shift from being perhaps a bit of a lifestyle business to some people to being more of a corporate DSO model that has access to capital, has scale, can invest in systems, and will have a competitive advantage over time. And then I think your other comment, which is almost sort of more interesting in a way, is just what's the outlook for NHS dentistry? Is there going to be a minimal NHS system? And will there be that dramatic change where it's really a safety net, but people need to access private dentistry in a larger way than perhaps they do today? So on that, that's a very good segue into my next speaker, Ian Gordon, who is the founder of Alpha Vitality, which has been combined with Riverdale, and has more of a profile in NHS dentistry as well. And Ian is I know, on the board of the Association of Dental Groups, along with you, Sam. So extremely well plugged in. So Ian, I'm going to hand over to you.
Thanks very much, Henry. Yes, Sam, as often we are very much aligned on things, and I agree with a lot of the takeaway messages that you've given there. That's definitely the way things are going to be. Just a quick bit of background for myself. Obviously, as a clinician, I've been involved in building up a couple of groups of practices, but stopped at a certain level, which is where we became the platform investment for Riverdale, which, as you say, were backed by Opposite Capital 18 months ago. So very much a buy and build model, and that model hasn't changed. Obviously, it's got to be revisited and reassessed and looked at in the light of what's going on. It would be irresponsible not to, but the principle still remains, as will be the same for a lot of other smaller corporate groups that are looking to build. And so it's a question of looking at what the opportunities are, and there certainly are going to be opportunities there, and there'll be practices that have found this particular situation extremely challenging. So in our first year as the platform, Alpha met all expectations, and we were able to expand from 10 to 16 sites with the acquisition of a number of practices, all based in the Northeast. And so at our present arrangement is to keep it fairly regional, but that doesn't mean to say that we couldn't expand outside the region. But it's certainly been very helpful in this particular crisis to have quite a focused estate that has allowed us to operate the 11 urgent dental centres that we've been operating, initially starting off from 1 or 2 practices to the full 11. And this is a much easier situation for us as we try to expand the amount of treatment that we're going to be providing from Monday. Very difficult for the practices that have been effectively closed over this period, because you can't just learn the new norm overnight. I think my focus for today is looking at what the immediate priorities are, but also recognizing that where we are now is not where we're going to be almost certainly in 3-6 months' time. And there's a huge amount of focus and detail on the plethora of guidance that we've had, some of it contradictory. And if we focus on that detail, we won't be able to see the wood for the trees. And we've got to look beyond the now and try to think what's going to stick in the future. I completely agree with Sam that the digital platform is going to be huge. I think the NHS has been very generous in supporting practices, although that statement comes with the caveat that we don't know how draconian their clawback might be. And so we've had this situation of, we will fund you, you must look after your staff, which quickly changed to, we will fund you, you must look after your staff, but we're going to take something back, but we're not going to tell you how much we're going to take back or when. And as we move into the situation of now being open, we're hoping that there's going to be funding without a particularly activity measures such as UDAs. But again, we don't know all the details. So there's a huge amount of goodwill and faith from the profession because not sufficient questions have answers. But if we move out of where we are now and we look to the future, I think there's things which will be challenging, but there's also huge opportunity. And as for things like unemployment, there will almost certainly be places, particularly in the corporate sector, where maybe there've been some vacancies that were more challenging to fill, particularly with the loss of locums from Europe. And I don't think anybody needs to be worried about unemployment if they're a qualified dentist. So in terms of our approach to things, it's certainly not business as usual, but we're looking to continue with the program we had in place and just reassess the market as we go forward.
Thank you very much indeed for that, Ian. So I think my sort of takeaway from that is you've actually benefited from being geographically focused in terms of managing through this difficult period, that having a number of practices open for emergency treatment is going to actually make reopening properly on the 8th of June significantly easier. And I think, on your slides, you mentioned there are a number of challenges that you've had, which you're navigating through alongside everybody else. I guess just on this last slide around UDA is dead, long live the UDA. Would you just like to sort of comment on perhaps where you see that outlook for the NHS dental business, given what Sam was saying about potentially significant changes there? Because I think if investors are looking at this sector, they obviously want to understand what the implications of that are.
The UDA has never been an appropriate activity measure, and I could speak for the rest of this seminar on the reasons why the UDA doesn't work, but it's something we've managed to live with for the last 14 years, and it's never been more inappropriate than it is now. You cannot have a model that requires a stack it high, sell it cheap approach. And dentistry has always needed to have more time with patients, always needed more time for prevention, and it was never built into the payment metric. So I think we will continue with patient charges needing to be levied. At the minute they are linked to UDAs. I can see a situation where the NHS does ensure there's a safety net for those who really need treatment, people who are exempt and at certain levels of treatment. But we've got to remember that your average adult fee payer is paying quite a large percentage of the cost of their treatment. We've got practices which are funded 60% by patient charges, and there's only a relatively small contribution from the NHS. And if you exclude children from the calculation, particularly in more affluent areas, adults are paying for a large amount of their NHS dentistry anyway. So it's not a particularly worrying leap to find that if the NHS became more focused on the real need, that there couldn't be a safety net for private dentistry, but not private dentistry perhaps as we've always known it, maybe more of a low-cost private model that would allow access to a wider range of people to private treatment. Now, as a clinician, I would find that a marvelous opportunity, because one of our biggest constraints is that the GDC standards even includes the requirement to offer NHS patients NHS treatment. Even if a private option may be better for them, we've got to make sure that we offer them the NHS. And that is a real barrier to having an open conversation with a patient as to what their clinical options are, and a real difficulty in the consent. Consent becomes semantics around how clever you are at wording the statement. And if we have a core service in the NHS, there's huge opportunities for an expansion of private as we come out of this, would be my view. I don't know whether that's something that you would concur with, Sam, but I do think that a loss of the NHS as we know it now doesn't have to be a negative at all.
Just unmuting. I agree. I think when you step back from the sector as a whole, demand is not going away and needs to be serviced somehow. So if the NHS retrenches, there will be a space for somebody else to pick that up. So I absolutely agree. I think we have a lot of great characteristics in dentistry. So from a investor perspective, they said demand is not going away. In fact, there's huge pent up demand. So I think in the short term, see a very strong bounce back, and in the medium term, see people also picking up on the sort of broader macro trends of wanting to look better, which also drives towards more of a consumerized service versus a core health service. So I agree with you, Ian.
I think, Sam, and that's a really interesting way to segue into Stuart, because I think what I'm hearing here is it's a more nuanced picture there. It's not NHS good, private bad at the moment. There is actually the opportunity for a low-cost private service to step in to significant volumes as the NHS potentially moves away from the sort of the volume activity-based model that they've got at the moment, and frankly in the backdrop of limited funding that we're going to be facing. So Stuart, thank you very much for joining us. I will hand over to you just to maybe draw some of those threads together, and also as another dental practitioner, but also somebody who talks to the broader sector as the chair-elect of one of the regional LDCs. It'd be very nice to get your perspective on the direction of travel, particularly in the light of COVID.
Well, thank you very much for that. And isn't modern technology marvellous? Bit of a struggle getting through to you this morning, but that's fine. Yes, I'm chair-elect not of a regional, but of the national one. We cover the whole of England and Wales. And I'm delighted to be able to correct that, because I understand that the current chair is actually on the call and has sent me a text through saying you've usurped me, because there was a slight mistake in that. So I'm happy to explain that. Of all those things listed there, probably the most important part is general dental practitioner. I was going to say I am still a clinical dentist. I'm going to say I was, because of course, like the rest of my profession, I've not been able to do very much for 10 weeks. I am an associate in a practice. I started as an associate in the 1970s in that practice, became a partner, became the principal, became a partner again, and last year sold the practice and still work as an associate there. I have for 10 years been a dental practice advisor to, well, first of all, Manchester, now Greater Manchester, and now the Northwest team. It keeps changing. So it does mean I have to sit down at various health service meetings and I hear what's planned, and I do my best not to laugh sometimes at the sort of things they are thinking about. I have very little to disagree with what Ian's already said, Ian Gordon. The UDA was always a very poor thing. To be honest, it's an accountant's way of looking at dentistry, and it really has collapsed under this. What I would emphasize, and to my clinical colleagues on the call, this won't come as a surprise, in dentistry, in terms of treating disease, we're treating two opt-in diseases. You get holes in your teeth and you get gum disease, either because you eat rubbish food or because you don't brush your teeth properly, or more likely a little bit of both. Now, I think that the future for the health service, actually going back to health rather than disease, is going to be a huge increase in the amount of prevention. Making sure that people don't need things doing. And this is a really important part of dentistry. The issue, I think, that the people further up the chain will have is that's very hard to fit into a payment system. How are you going to get patient charges for that sort of thing unless we look at health improvement in a segment, the particular group of people you're looking after? So I really don't know where that's going. In terms of the business of dentistry, because I fulfill these roles with my own LDC and the regional group of LDCs, I'm getting a lot of very anxious calls and emails from two groups of people. Some of them are people, well, probably 10 years younger than myself, because I appreciate I'm an old wrinkly to be a clinical dentist, who have been thinking about selling, and this has really thrown a wobbly into the system. Some of them say, well, this is the straw that's going to break the camel's back, and others saying, oh, I can't sell now because the value of my practice will have plummeted during this. I don't know the answer to that. The other very anxious group are young principals who bought in perhaps the last 5 years or something. They've probably taken on a huge amount of debt to establish their practices, and now they're really wondering, how am I going to service this? What is the future? What sort of nasty thing will the health service replace the UDA with? And how do I go on? I absolutely agree that we're likely to have a very different service, a very different offer afterwards. And I'll be delighted to repeat myself if we move to a health service rather than the disease service, because to be honest, that's what the NHS has been for a lot of time, firefighting.
Thank you very much for that, Stuart. I think that sort of sets the scene very nicely, actually. Just to sort of the themes I heard from there is this hopefully this shift from treatment to prevention and how we pay for that, and maybe something like a capitation model might work. And then, as you said, the concerns people have about whether they should be selling their practices now. I think one of the dynamics that would be interesting to hear from Sam and Ian as their groups continue to acquire is whether people with the outlook think it's going to take, whatever it might be, a couple of years to come back, and actually, do they want to wait that long? Maybe they do sell now at a lower valuation rather than waiting to rebuild the goodwill of their franchise. And then the last point around the level of leverage in the market, which I don't think's really hit home yet, because we have had coronavirus bounce back loans. We've had the HMRC being very, very amenable in terms of not collecting VAT and PAYE. So people have cash today, but that could change very, very quickly. I think there are also clearly a number of legal elements to a very fast moving market. And so I'm delighted to ask Helen to take us through some thoughts from the Charles Russell Speechley perspective around some of the risks that practitioners are dealing with. So Helen, over to you.
Thank you very much, Henry, and good morning to everybody. My name is Helen Wong, and I'm a partner at Charles Russell Speechless and part of the dental team, working alongside Johnny Steele and a number of other members of the team. We've been extremely busy during the COVID period and lockdown, because we've had so many of our clients and contacts contact us because they're ever so concerned about, a whole range of issues regarding dentistry, survival, and now return to work scheduled on the 8th of June. So the first slide I want to talk about is the legal risks of returning to work. A number of practice owners, whilst they can legally return to work on the 8th of June, have expressed hesitation, predominantly because a number of their staff are concerned about going back to work, that they're worried, they're either shielding or they are vulnerable themselves. And practice managers and owners have a duty of care to their staff to make sure that they are safe and the correct risk assessments have been done. The difficulty lies in that people don't quite know what the new normal is going to be. And what they will find, that even though they are writing risk assessments and planning the routes for patients to come through and triage and minimizing contact. Until it's actually executed in practice, people don't quite know whether that will work. And our advice to you listening and to our clients is that risk assessment will undoubtedly be fluid. It will be changing on a basis depending on what happens in practice. Likewise with patients, dentists haven't been tested for COVID, and majority of patients haven't either. So it's making sure that before anybody does come to the practice, that there is some sort of triage. Are you feeling well? Do you have a temperature? All these kind of things that seem commonsensical but haven't really been implemented in the past. The business side of it, though, is a totally different story because, like in the questions that we're seeing, a number of people are concerned, and rightly so, about PPE, not just about accessing it, but getting it at the right value. And clients have actually said to me, PPE is now 8 times what I was paying for it pre-COVID. How can I actually justify, the business model, especially if we've got to fallow for up to 60 minutes between patients. So we're seeing less patients. The cost of, PPE and possibly materials has gone up, and we're not quite sure what we can and can't do. There is, like Ian says, tons of guidance out there, but it's kind of overkill. People are really wading in treacle to wonder what is the new normal. And if we go on to the next slide, Sam, Ian have talked about, valuations, what possibly could happen in the future, financing, what is the best model. I'm not a valuer, so I've spoken to a number of my contacts, and we've had Christie say they believe that whilst immediately the valuation is difficult to estimate, they're thinking about the next 6 to 12 months things might bounce back to normal. Having said that, there is a distinction between the types of practices out there. If like Sam, you've got a well-run practice, and like Ian, it's all, very modern and everything's documented. You've got technology tapping into the patients and you've got an excellent system in place. That's great. Also, if you've got a capitation scheme for private practices where you've got, goodwill protected by virtue of that plan, those practices would more likely than not be the attractive types of practices that buyers would want to take. However, if you've got a pay per patient type of practice, I think that's where you're going to struggle slightly. And speaking to Luke at Dental Elite on bank funding, because really that's the blood flow of whether transactions will continue and whether valuations will remain relatively buoyant, is are the banks still funding? Now most of them are, but he's indicated that Santander has slightly paused on their funding, so that's an interesting kind of development, given that the government's desire is for the banks to support businesses. I interestingly during the lockdown have had a number of inquiries from buyers wanting to buy, and people would think, but there's no business, it's locked down, is there any value in buying this practice? Well, like the previous speakers have said, for NHS practices, those are still being paid under the GDS contracts. But I believe there is actually still value in the practices, and I believe this is a slight blip. And whilst we can't really compare the recession, in the 2007 era, in actual fact, during that time, dentistry maintained its value. It not only maintained, but it increased, and it was buoyant. And what we're finding here is that whilst, dentists like to buy numerous different types of assets, and so, hospitality has taken a slight dip. There might be a slight pause on, acquiring different types of asset classes. So I think, investment into the dentistry sector is still very, very interesting to people as well as to private equity. I think there's always going to be a need for dentists, which is why the value, in my opinion, will be retained. It's just that at the moment, everyone's got toothache, but it's on pause. You can't go and see the dentist. Once those, doors are opened and things are back to what we consider the new normal, then, the books will be filled very quickly. And I think the difficulty will be not where are the patients, but how do I manage the patient load with the fallowing and the PPE issues that we've got to kind of adhere to, as well as the risk assessments. And, the biggest fear, I guess, is if there's a second wave, what happens then? And so what I'm advising my clients to do, and I would love you to think about it too, is have you got that contingency plan in place? Sooner or later, we have to go back to business. We have to go and, look after our patients. But how do we have that contingency plan? And like Sam said, it really is going to be survival of the fittest. If you're the strong business, you will get through it. It might not be as profitable, but you will get through it. And there will always be business to be done. I'm speaking to clients who have had to rejig their opening hours. So they might be opening earlier, closing later, putting people on rotas, possibly working a weekend as well. So, not doing early Fridays anymore, but that's the way they're fitting in the patient and making sure that they adhere to the guidance that has been set out in order for the risk assessments and the safety to be, the number one priority of these practices. I also am seeing in the transactions that I'm working on a bit more focus, and rightly so, about the warranties and the risk allocations. So there's been this kind of debate between buyers and sellers. Naturally, they will have diopposed views as to how the risk allocation should work, and the due diligence on the target company, maintains, but we're having to do an extra layer of work because the practice that was being sold pre-COVID arguably is quite a different practice from what it is now, and documentation about furloughing staff, or if you're an NHS practice getting the payments from the NHS, all that needs to be documented. And some buyers are wanting to identify specific COVID risks and get possibly a specific indemnity against that risk to mitigate that particular issue that might arise. So I think there's going to be quite a lot more work to do in terms of transactions post-COVID. The negotiations between the buyer and seller have always been, relatively antagonistic because of the diopposed views, but I think there's going to be even more negotiations for people who want to sell their practices post-COVID. As a seller, I think it's absolutely fundamental you disclose as much as you can about all COVID risks, and if you've already provided stuff in the data room, I am urging people to give additional disclosures as far as possible in order to mitigate the exposure. So that's my kind of advice. I just had Dean message me from MediEstate saying he's seeing actually an additional number of people book in for viewing. So it's not all bad news out there. There is activity. We're busy. Our clients are still, asking us to help them with transactions to buy or sell. Of course, it's not to the level that we were at pre-COVID and last year, but there is still business to be had. And what I'm seeing as well from FTA, who've messaged Dave, said that they're actually doing viewings remotely. So, once again, using technology in a kind of more positive way to kind of keep business going. Because, like Stuart said, a lot of people have been calling saying, this is the last straw, I'm thinking of selling. What do I do? Can I maintain the value? If we can, let's get on with it and let's get selling. So, in a nutshell, that is the landscape that I'm seeing in terms of practice sales and purchases. And the final slide I'm not going to talk about, but I'm going to let you read it for yourself, but it's things for you to think about. Just like you're getting your practice in place, making sure you've got the risk assessments and everything ready to go. Likewise, behind the scenes, make sure that your documents are in order. Make sure that your employment contracts, your associate agreements are all in order, just to get ready if you do want to sell. And I'm going to stop there because I know time's short. Thank you.
Thank you very much indeed for that, Helen. And what we're going to do now is move on to the Q&A. Just very quickly in terms of where we were on valuations stabilizing. So 50% think within 12 months, 33% within 2 years, and only 19% within 6 months. So interesting to get the view of Christie's there of 6 to 12 months, which is obviously on the more optimistic side compared to our attendees, but hopefully they're right. If we go to the Q&A, I think the real opportunity here is for people to upvote the questions that they would like answered. But what I'm going to do is start with the first one, which is around recruitment, because I think we've seen a sort of sea change in terms of lots of people that are in some industries being made redundant. But I think we've got a sector here where you need obviously some clinical skills which are not necessarily available in the broader economy. So I think maybe if I start with Ian, I don't know what your view is around recruitment, whether Brexit will have an impact on that if we're heading for a hard Brexit, frankly, or whether actually the fact that the broader economy is slowing down has taken the pressure off us.
Yeah, people who know me would say, please don't mention Brexit, because that would be a whole new discussion. Brexit did cause a lot of challenge in terms of recruitment, and we've always been very proud of our extremely low churn rate and our ability to recruit, and having 9 foundation dentists in the group is always extremely helpful. But it was getting to the point where there was an element of concern in relation to recruitment prior to COVID, that some of the practices were more challenging to recruit to, and younger dentists were wanting to get into the private sector earlier and earlier in their career without necessarily having had the experience that was necessary. So this is definitely a sea change. Stuart mentioned the challenges that younger dentists who have bought practices at perhaps the old peak of the market have got large bank loans to service, and they may well have been wanting to fulfill their NHS contract by using associates and hope to grow their private work themselves. I think we will see some of these dentists deciding in the short term that they'll focus on the NHS and maybe less so on the private at this time. And so there may be a period where there's associates who find that they're going to have to look elsewhere. My understanding is from talking to colleagues in ADG that there are some excellent opportunities still available for people to take posts within the corporate sector and in other practices. So as I said earlier, I don't think there's any risk that there's going to be unemployment per se. We may have challenges with recruitment of dental nurses. That's certainly a possibility, and we're seeing some people who have an exaggerated concern perhaps about the risks of working at this present time. But we're not going to have COVID hanging over as the threat it is now for a very sustainable period. And I keep coming back to, we've got to separate the now from where we're going to be in a few months' time, because to be honest, if we've got the same restrictions in dentistry as we have now in 12 months' time, and that following what's happening in the country, then we really have a serious problem in the country. And we can have some confidence that the measures that we're having to take will change as the threat level from COVID changes.
So I think, Sam, unless you've got a different perspective, potentially some challenges around the nursing level, but actually the broader context is this is less of a of a problem today than perhaps it was. And there are other sort of larger problems out there, should we say? Would you agree with that?
Look, I don't see this as a major challenge. In truth, I mean, we're still recruiting people, and where we saw a couple of applicants, we now see dozens of applicants. So I think the change has been clinicians eager to work, eager to find a way to get their earnings back to where they have been. And I think if the healthcare sector generally is well positioned to rebound, they'll be in a position to offer jobs where other sectors potentially can't, and that will allow us to compete for a broader nursing colleagues. So I think that's a challenge which will always exist, but is less acute than it was pre-corona. Certainly for private in the NHS, I don't have such a good visibility.
So I think that the 4 questions on the screen at the moment are actually really linked, which is, what is going to happen to utilization? And it comes back to what Ian was talking about, where's this market going to be over the next 12 months? Because I think we've got a situation where, as we sit here today, PPE costs are higher and utilization is lower. And at the moment, you're going to get paid the same amount of money for your UDA. You're going to get paid the same amount of money for a planned patient. So in some ways, how do we adjust the business model so that we can have a sustainable business? i.e., how do we increase the revenue to compensate for the drop in productivity and for the increased costs? And I guess the one obvious one is to charge new private patients a significant premium over what they were previously paying to reflect the low utilization and higher costs. But I wonder if there are other levers to pull as well. And Sam, given that Portman are specifically identified there in terms of how you're going to recover some of those PP costs, do you want to have a first crack at that?
Sure. Look, I think the first point is some good reference points from what we've seen in Europe. So in Holland, Belgium, and Norway, practice revenues are back to close to 100%. In some cases, they're over 100%. So I think from a patient demand side, this is really good evidence that patients will come back. All those markets are charging for additional cost of PPE. So in the private sector, I would expect the cost of PPE to be passed on to the patient. And obviously over time, we would expect the cost of that PPE to decline actually pretty rapidly. The challenge continues to be in the NHS, where very often the cost of PPE is actually going to be higher than the value of each single UDA. So clearly that disconnect is a pretty hard square to circle, or maybe a circle to square. And so that is where the fundamental question comes back, which is how will NHS services be provided in a way which is sustainable? And when you step back, the fees that private practice were charging pre-corona and the contracts that were set up pre-corona didn't envisage the costs of PPE. So there needs to be a way to reconsider those contracts in the light of additional operating costs. So I think there will be some really big changes. I think private have more tools because they have price freedom versus the NHS, which are obviously constrained in terms of charge through.
Ian, I think do you have anything to add to that?
Not really.
On most things.
Yeah, not really. I think that if we end up getting a continuation of 12ths being paid in Q2 from the NHS, there may well be a balancing calculation that says that we've got increased PPE costs, but we've got a reduction in other costs if we're not doing as much laboratory work, for example, and other materials. But it's a little bit too early to say that one will definitely balance the other. What we really need is certainty that if they're going to pay 12ths in Q2, it's not linked to this sword of Damocles hanging over us, that there's going to be further abatements or further adjustments, or there's going to be an activity measure which is undeliverable. So in essence, I'm reasonably happy about the NHS side, provided we get a little bit more certainty. And of course, we can't pass on the cost of PPE, because we wouldn't be allowed to make a surcharge to the patients under the current contracting arrangements, at least.
Understood. Stuart, I'm going to ask you, if I may, to come in on the next two, which is, at the moment, private hospitals have basically had their capacity co-opted by the NHS. That contract's likely to get extended to the end of August. Do we think that actually the same will happen to NHS dentistry, that UDAs will potentially continue to be paid, or that capacity will be taken over in the private sector to catch up on the backlog of procedures? And then the second question here, which has had a lot of people upvoting it, is, do we think there's going to be a change in the way that consumers interact with dentists? Are they going to change their attendance, or their effectively their ability to manage their own dental health? And will there be a switch from NHS to private? I think Ian had some interesting stats that only 55% of people in the last 2 years have been anywhere near a dentist. So, Stuart, I don't know if you've got any thoughts on those, whether the NHS will use private capacity and if the consumer will change their behaviour.
Well, certainly, yes, I do, but not quite in the way that the question's being framed. I'm well aware, because part of my wider job is dealing with our using the private hospitals at the moment. That is likely to carry on, and it's going to be absolutely essential because of the strain in secondary care. But concentrating on dentistry, of course, the big issue now is getting practices back at all. Forget the distinction between the two. I expect most practices, of course, are mixed. They're not private, they're not NHS. They do a balance of the two. And from the work I do with the local community group, there seems to be a lot of patients whose income is going to be severely curtailed, who may well wish to move from private to health service. And the issue may well be that the health service provision we've got within my area won't be enough to meet the demand of these people. In the fullness of time, as other people have said, I really do think there's going to be a little bit of a change back, and that will bounce back. There'll be far more provided. I was going to comment about workforce. I think the health service envisages far more use of the people who work with dentists, hygienists, therapists, delivering the preventive message, getting that across. Certainly a far wider use of teledentistry, as it's become known, where you don't actually meet the patient, so there's not a great infective risk one to the other. And then you've asked about how patients are going to react. Well, certainly within the community group, there seem to be quite a lot of patients, particularly older patients, who are quite frightened of going to the dentist. They understand we've been closed because of the infection risk, and because they're at a higher risk, they say, well, I'm not actually going to go back anytime soon. Some of them say until there's a vaccine. So we may get this drop off. I have to say, there are quite a few people in the community group who actually say this is totally overblown. This is just a little bit of winter flu, but a bit worse, and the government's totally wrong. I don't really agree with them, but that concept is out there. Some people think that there's no issue. We're making a mountain out of a molehill in this respect. You know, I really don't know quite where that will pan out, and I expect there'll be something of a herd thing. Once we do get reopened and we get a few people coming through, there'll be an understanding within the community that people don't go to the dentist and immediately contract COVID. It's not that dangerous, and people will be able to carry on. But I think that's going to take some time, Henry. I don't think it's going to happen straight away.
Well, I take some comfort from what Sam was saying about the Scandinavian markets effectively being back to revenue pre-COVID and actually ahead of that, so that people have got over the issue of whether they're going to contract COVID within a dental practice and actually, you know, just getting on with life. So hopefully that is the direction of travel. I think just turning to you, Helen, quickly, we've got a couple of legal questions. So one is about the legality of starting elective non-urgent work for practices that are exclusively self-pay. And the other is how you protect yourself from potential NHS clawbacks in a sale contract if you're selling now. So I don't know if you've got any thoughts on those two.
In terms of protecting the risk in a sale, this is all about the warranties and indemnities point, and the disclosure exercise that you would do in the process of a sale. You'd certainly want to ensure that you weren't taking furlough money as well as taking the money under the NHS, and making sure that your house is in order from that perspective in terms of the paperwork that the NHS may well have sent you in order to pay you for the UDAs. The ways we kind of protect our sellers under the sale contract is to limit the time of the liability, and we would have thresholds and baskets to limit the liability as well. So there are some technical legal mechanisms that we can certainly assist with in order to assist with the sale, and the ultimate goal for any seller is to get that clean break, and that's what we really fight for and help the clients try and do as best we can. And if there are additional risks beyond the clean break, then we will try to limit it to as tight a remit as we can, so that your exposure is as limited as possible. In terms of the other question about starting elective non-urgent work, I think the guidance, there's a lot of guidance, but I think we have to probably read a bit more into that first before answering it. I don't know whether Ian or Sam's got any thoughts.
Yeah, I can look at that from a dental legal advisor perspective, and would say that there's quite a lot of flexibility, particularly in the FGDP guidance. I think any practice which decided they were going to do non-elective, non-urgent work, and were going to try and fit 30 patients a day in for that sort of work, would face criticism, because we've got to respect the social distancing measures which come into play. But if, having dealt with the emergencies and the urgents and the people with pressing need, they could get back to seeing safely patients who was for more elective treatment, I see no reason in my reading of the FGDP guidance why they couldn't do that, provided the other measures are in place.
I've got to turn to the topic of buying and selling practices and valuations, because as you can imagine, it's at the forefront of a lot of people's minds at the moment. And I guess just try and roll some of these together. So is Portman still buying practices, and if so, what type of practices? And have you changed the structure of how you're buying them with deferred consideration, or indeed the valuations? And then I think, just on valuations generally, it'd be really good to hear the perspective of Ian and Sam as people who are consolidating the sector and actually buying these. So on the buy side as opposed to the sell side, and trying to talk the market up, and just to get that contrast. So maybe if I start with you, Sam, around what you're buying, valuations, structure of the transactions, and just your perspective more broadly.
Sure. So look, valuations, if I start there, I think if I step back from whether practices are going to get back to the same level of profitability or more or less, thinking really about what have been the drivers that have seen practices get to the levels they got pre-corona. And that was a couple of things. I think one was the general thesis around the attractiveness of consolidating practices into a bigger group. I think the second was the weight of capital sitting in the market and the appetite, particularly of private equity. And then the third was around the inscrutable question of quality of earnings. And if I step back from those in turn, I think the thesis currently around the consolidation play is being challenged. So of course there are going to be winners and losers, and some groups are going to come out brilliantly. But when you look across the whole of Europe, the largest players are publicly challenged in terms of their leverage levels and their performance. And so I think for the time being, the thesis that putting groups of practice together is easy peasy and anyone can do it is probably quite challenged. And so even before Corona hit, valuations were coming off quite meaningfully in the UK. The second element is around capital, and realistically, people are looking for better returns on their capital. So whether it's an IRR or a money on money or a multiple, people see greater risk, and where they see greater risk, they want better returns, and those returns translate to practice valuations and what people are prepared to pay for them. And then lastly, about whether dental revenue is 100% secure, I think the answer to that is now quite clear. So when I think about it, I try and think about a range of outcomes, which is it going to go up? Is it going to stay where it was, or is it going to go down? And truthfully, I can't make any argument for why it's not going to go down. I think it's completely fanciful to think that it's not going to moderate and potentially moderate quite significantly. Again, I think there'll be a range of outcomes. I think really good practices, which are well invested, which are embracing the change, will hold their value much better than practices that don't. But I see a market where at the bottom end, practice valuations for practices could as much as halve, and where valuations for the best practices will hold up, but will come off meaningfully. And I think that means the very, very best practices will be talking more like the low sixes, early sixes, late fives, and other practices will be well below that, which is truthfully where the market was before the weight of capital driven by private equity came in. In terms of the risk share, I also see that changing quite dramatically from where deal terms and ancillary clauses were weakened pre-corona to a shift where deferred consideration will be used to share the risk of performance of practices going forward. And conceivably, people will start to focus on saying, well, look, if you're going to ask me to pay a multiple of EBITDA, I want you to share the risk around that EBITDA, because now different costs are coming in. So I think there are quite big structural changes conceivably coming in terms of how people value practices and the split of deferred and initial consideration. In terms of Portman, we're very long-term players. So as I said, started the company 11 years ago. We see ourselves being here for at least another decade. So we are very active in the market. We've always looked to bring on really good practices. We've always looked to bring on practices that share a vision, who are forward-leaning, and who want to embrace change. So we see tremendous opportunities for the sector, not necessarily over the very immediate term, but over the medium term. And so, as I said, we're very active. We've got the whole team bringing on practices, but we know right now the market has changed dramatically, and that's probably best exemplified by the fact that to my understanding, there is no other group purchasing at the moment. Some were public about that pre-corona. Some have been less public about that, but that is the reality of where they are post-corona, and that will have big changes in terms of the demand side.
Thank you for that, Sam. It's a very thorough response. Ian, you've got slightly different profile of business, but it'd be really good to get your take on this as well.
Yeah, it's a different profile, and I hate to start the answer by saying I agree with Sam, but unfortunately I do in many regards of what's being said. The fundamental business of dentistry, which is backed by private equity, is always buy and build, as many on the call will know and have more experience of in that than perhaps I do personally. But it's a question of where do you pitch that, and there's a lot of groups will have practices that are in exclusivity. They'll have practices which they were looking at in the pipeline, and it may well be how the deal is structured that will allow deals to go ahead. So more deferred income and more linking of any earnout to EBITDA may be the way forward, so that if the concerns for the acquirer are that the market doesn't pick up, or that costs remain high and that margins are squeezed, that is built into the deal. But equally, from the seller's perspective, and remember I was effectively a seller 18 months ago, you're looking at, well, what if it isn't as bad as that? What if it actually is really good, and I'm going in and selling too low too early? Then maybe the deal will need to be structured so there's an upside for people as well. And that's the sort of approach that I would like to look at. That there's a sharing of risk and a sharing of opportunity in the deal. From our own perspective as Riverdale, we from desktop due diligence, of just knowing about practices and what we can find out at a high level, we don't proceed with looking at a very large number of practices that come available on the market. And again, I would say that there's two things that can affect a valuation. It's also, what are you actually buying? And if people are running practices that they know are quite run down, they know they've got old equipment, they know that they need to invest, don't take the attitude, well, anyone will buy, I'll just sell it as it is, and they'll have to invest. Don't take that attitude. Get your practice right, just like you might do if you trying to sell your house for the best possible price. You wouldn't leave it with very obvious things that needed putting right. And so that might need some investment, but if you invest now and get the structures right, get the infrastructure right, as Helen alluded to, getting the legal processes right, then that can make a sale a lot less challenging and a lot less arduous if you actually spend the next 6 months putting the practice into a state that you would be proud to sell, rather than in a state where the buyer's coming in and having to allocate quite a lot of proceeds to make the practice something that would be fit for the estate. And so that would be my suggestion, that I think there will be challenges to maintain values, but the best practices can make themselves even better, and the ones that we wouldn't look at could try and get up to the standard where they are desirable to acquire.
Very good. Well, I'm conscious we're running out of time, so I'm going to have one more question to Stuart. And a number of the questions we're receiving are around bank support. One person was talking about buying a dental clinic. Lloyds Bank are now asking for personal guarantees, security over their house. And I wondered whether the conversations you're having with a broad range of the members that you talk to, are people coming under financial pressure, do you sense? Yes, the well-capitalized or the high-quality clinics may be surviving relatively well, but equally there are people who may have acquired a clinic recently with high levels of leverage, or there may be others who are struggling. And Stuart, I think it'd just be really helpful for us to get a sense for the sector. How are you hearing a lot of concern out there? Or are people just really focused on opening up on the 8th of June and rebuilding their business?
Well, with the announcement last week, you won't be surprised to find that everybody's focused on reopening and when they're going to be able to do that and what they'll be able to do. But stepping back, immediately before the starting gun was fired, yes, in the LDC meetings, we were getting a lot of people mentioning these things and then contacting me afterwards. I won't mention specific lenders by name, but some of them seem to be demanding the lifetime servitude of their firstborn and goodness knows what else. All sorts of extra things are being added in. Actually, one of the more worrying things, I've been contacted by the parents of a couple of people who've bought recently, and it's obvious that the bank of mum and dad have largely topped up what's been a commercial bank loan, and they're very anxious about where this will go. And please remember, I'm not a financial expert. My qualification is dentistry, so I discuss with them where that might go. And the other useful aspect of the crisis, and there is a feeling that you should never let a good crisis go to waste, has been that we've had massive attendance at the LDC meetings, up to 100 people on these Zoom calls listening to it. So very often these people who are very worried can be put into contact with other people who are in the same, and the business of a problem shared is a problem halved. There's a lot of fear and uncertainty out there, and I think a lot of the fear is about the uncertainty. It's the fact we don't know. And I'd love to be able to tell people exactly what we're going to have to do in our practices to meet the requirements of if we have to live with COVID for the next 2 years. It's a novel virus. I don't know better than anybody else. So
I think
it's
on that
very
note, Stuart,
yeah.
none of us know the answer, but equally, my takeaway from this has been very positive, which is the clinics are opening up, Scandinavia's back to normal, and actually with a sort of pragmatic outlook, there could be some shifts in the market with some real opportunities for people. And I think on that, I'm just going to have to wrap up. This webinar and all the slides will be available both in the follow-up email and from our website to download. So thank you very much to our partners, Charles Russell Speechley, Healthcare Markets, and Turn to Us. Thank you very much to our panelists for taking the time, really appreciate it. Just to flag that we have our next webinar next week, which is on the topic of rights and regulation, where we're trying to encourage the Care Quality Commission to engage with us and talk about what they've learned from this crisis. And I think that applies as much to dental as it does to any other sector. So once again, thank you all and goodbye.
Thank you
very much.